Trust, transparency, expertise. These are the building blocks enduring relationships are built on. As investment management professionals, let's measure up. CFA Institute.
Hello and welcome, everyone. I'm Lauren Foster, and this is Take 15. On today's show, we're going to explore a fascinating question, and that is, would you take stock picking advice from an AI analyst? And for that, I'm joined by Sena and Bryan Healey, the masterminds behind Aiera, and that's short for Artificially Intelligent Equity Research Analyst, an adaptive deep learning platform designed to enhance active fundamental investment strategies. It's also the name of a startup founded by Ken, a veteran technology analyst, and Bryan, who helped build Amazon's digital assistant, Alexa. Ken is CEO and Bryan is CTO. Welcome to both of you.
Thank you.
So your wunderkind, Aiera, is a workaholic and a news junkie. She tracks about 500,000 documents a day, including video and Twitter, and issues buy, sell, hold recommendations on more than 1,500 stocks. So let's begin at the beginning. Tell us the story of Aiera's creation. How did she come into being? And is Aiera a physical robot?
Sure. So about 2 years ago at Evercore ISI, where I worked at the time, I started doing symposiums on AI and really just wanted to invite clients together to understand what were the questions that they should be asking of companies who were talking much more about this topic. And as part of that process, I had the opportunity to meet Bryan. And Bryan was working at a travel company focused on artificial intelligence. And his background prior to that was from Amazon Alexa. So in learning of his experience there, and having covered Amazon, I quickly asked Bryan if he could assist me on a few report ideas I had. In doing so, the demand I learned from clients was such that it really required him speaking to them directly to get some of the questions answered, as opposed to me filtering it. And I think that as we went through that process, and ultimately I brought Bryan on the road and brought him to a few different cities, and we met with a lot of clients, the conversations evolved from just meeting with the analyst and PM to meeting with their data scientist, their head of infrastructure, and really trying to help folks on the buy side think through sort of this looming question that they had. How do they leverage more of these advances that were coming out of platforms like AWS and GCP into their workflow processes? And what did it mean for how their fundamental analysts might work with some of their own data scientists and their efforts in this area? So I think it was after maybe, I don't know how many days of meetings we had, and it became clear from a few, I would say, particular hedge fund meetings where Bryan's ability to kind of walk them through the process of what they were trying to build suggested that there's just a greater demand for this than we had previously conceived. And as I heard Bryan explaining to these managers how to do what they were looking to do, I explained to Bryan afterwards, well, there are a lot of other clients that I've been serving for a long period of time, and I think they would benefit from what you're talking about as well. So Bryan went off and started building it pretty much on his own, and I just thought it was cool, but he didn't require too much of my time, so I was like, knock yourself out. And before you knew it, we actually had something that actually was writing research and making stock predictions, and so it was great to start watching it evolve. Bryan has to take entire credit for that, though, because you could waterboard me, and I couldn't tell you how to actually build something like Aiera, but it was very fun to watch it progress and start to get clients involved in the development as well.
And for now, Aiera is not a physical robot, right?
No, it is not. Maybe in the future, we'll see.
So I guess a follow-up question to that one, and this is directed at you, Bryan. How does Aiera work exactly, and what sort of data sources does she use? And I guess I'm curious, how do we know she's a she?
Well, I would say it's not a she. That's something we sort of did at the beginning to try to give it some sort of a persona. we've sort of moved away from that and trying to go more toward it's just an augmenting tool. How it works, so it sort of has a history behind that. So the original exercise was, could we use essentially the full breadth of the public web as it pertains to coverage around public equities to understand A, where the market's going, and B, be able to explain why it's going that way. And so the way it works today is and still today, we are scraping the web. So we scrape sources, about 9,000 sources ranging from Twitter. We essentially monitor the full funnel of Twitter and other social sources. We monitor news media, CNBC, Bloomberg, and so forth. We even monitor like financial blogs like Motley Fool. We monitor authoritative publications, SEC, court filings, IR pages, and even video feeds. We transcribe video feeds to text and have the model consider them, and even international documents. We monitor for language type, translate to English to make sure everything's sort of consumable by English clients. And all these documents get scraped and aggregated into essentially a representation of the narrative over a specific period of time. So say I want to look back over the last week or the last month. How is the narrative around any given company changing hour to hour or day to day? What topics are being discussed on Monday and how are they being discussed and in what context? And are they still being discussed on Tuesday and how is that discussion changed? And so these graph representations of the public narrative get fed in as signals to our models to generate forecasts. The basic thesis being the drivers that are going to move the stock price in the next week or the next month start to emerge in the narrative before the market's caught on at scale. And so we can sort of detect those changes and make decent predictions over the next 1 to 90 days. Separate to that, because the most important piece for us is can we explain the signals? We've built a series of workflows that try to understand what the model liked or didn't like in a given period and translate that into something human readable. So we have, I can go into a little bit of detail about the model architecture. So we have a sort of ensemble approach to trying to make these predictions. At the center of our model is 2 LSTMs that are responsible for doing universal triggers. What factors across the entire market or across all companies that seem to move the price? And then we also have a constellation of supplemental models using mostly more classical modeling techniques like Bayesian and random forest learners, but also others to suss out niche factors. Markets are hard to model, so things that move the broader market still might have very different factors related to individual companies like Amazon or Google, or groups of companies like FANG, or individual categories. And then this entire ensemble gets to vote and decide, is there enough corroborating signal across all of them to issue a forecast that we see something significant happening. Our second workflow interrogates those models to try to extract what signals were driving those forecasts. So what individual features or topics or sentiment changes or trends or other factors in that observation period were making the LSTMs or the supplemental models decide what to do. We use those to then generate the output research, organized by topic, explaining what was motivating that call.
Interesting. So a question, I guess, for Ken. What investment horizon and type of investment manager is Aiera best suited for?
Good question. I think right now it varies pretty widely. I think that we have clients who are very long-term, fundamentally driven funds. I think from their standpoint, they view Aiera as not so much as part of their investment decision on the buy, sell, hold, but as part of their ability to understand underlying themes around companies that they care about, as well as they look for certain criteria in stocks that they invest in. Maybe they have a more concentrated approach. Aiera helps them screen for companies that they should be looking at. But on the flip side, there are certainly near-term investors who are looking for Aiera's insight heading into an earnings report, and that are much more focused on the call itself, as opposed to the explanation and the ability to essentially interrogate the unstructured web. So I think it varies. I think our bias is to speak more directly to the longer term fundamental manager. And we've really made it a concerted effort to go in that direction. And I think the reason is that, I think the fundamental manager is still very important to the investment process. And I think there's a lot of talk about active versus passive. And, there's sort of it seems that there would be there's almost an acceptance that, trends will continue to move in a direction towards passive as opposed to active. And I think that's really a function of just the fact that the passive has benefited disproportionately from the advances within data and compute that has come from the cloud and all the other areas that are sort of, a part of what Bryan is leveraging. But it's important for the fundamental manager, given that they understand the companies, they've known the management teams for a long time, they understand how the customers think about the products that are being sold. They really do have a good idea of what questions should be being asked of these companies, that, we want to make sure that that's still very central in the process with Aiera. And I know you asked the question about, is Aiera a she? And I think in the beginning, we did have some fun with thinking about what Aiera could look like or would be as an analyst. And I guess if we assigned a voice box to Aiera, it would probably be female. But I think that it's more important to think about how do you use these tools to enhance the fundamental analyst and make sure that they view it not as a competing personality, but as something that can be customized to their particular needs. And so we offer it both as a base and as a premium product. And on the premium, the one thing that we ask is that the client name it something other than Aiera. Because the truth is that the benefit of having the premium product is that they can overlay some of their own data sets, their own annotation, and as they provide these additional vectors into Aiera, the output is not necessarily going to be the same. So they might have an AI analyst that is saying buy this particular stock, whereas Aiera is saying to hold it or maybe even to sell it, right? So those are the things that we have kind of learned to sort of navigate around in the time that we've been doing this.
So a follow-up question on the voice box. If it was going to be a female voice box, I'm just curious why. I
think because the name, Aiera, right? And I think that, it ends in an A. And so I think for me, it's more natural, as kind of this would be a...
So the Alexa, the eras of the world.
Yeah, I don't know why that's, people made jokes in the beginning that... this is because of the gender gap on Wall Street, that all to come out with an AI analyst was a way of trying to correct that, and it was funny, but it's not true. I think that at the same time, we've steered more towards Aiera as a thing as opposed to a gender, and I think that but it is a fun newer process for us all to go down.
So a two-part question now for you, Bryan. Can Aiera eliminate human bias that's often found in investment decision-making? And which biases have you targeted, if any?
So eliminate a human bias is probably, I'd probably answer that in a two-part question. So, effectively, it should help eliminate the bias in the investment manager trying to make decisions. But correspondingly and sort of paradoxically, by revealing biases in the open market, which is effectively, broadly deep learning and machine learning's ultimate goal is just to understand what motivates a large body of data based on truth. So truth in this case being ticker performance. So what's motivating movement in the market? So being able to understand what correlates to that movement obviously helps the investment manager understand that what they think is driving movement may not be what's driving movement. So we can sort of try to find that middle ground. But it also, interestingly enough, often detects biases in the open market. So what factors are driving stocks that really aren't fundamentally valid? And we had one particular client who sort of made that exact pitch of being able to challenge his own assumptions, but then see if the public perception of what's driving stocks is foundationally incorrect, thinking that the forecast the retail world or the other, intermediate investors are playing with is either wrong or just slightly misunderstanding the scope or impact of that data.
A good example of that is Aiera's had a call on Facebook that has been fairly negative at times, and we got a little bit of heat from some of the press when Aiera first came out negative on Facebook, and And I think from that, I was almost apologetic for the call because I was discounting some of the things Aiera was looking at and feeling that Aiera wasn't looking quite as much at the valuation of Facebook, which, you could make a strong case for. The value of Instagram, which was still becoming better understood. But Aiera was very focused on the election hacking, on the privacy concerns, on some of the just security and kind of safety and higher regulation around data privacy, et cetera, that was happening. And I think in the end, it certainly impacted the stock and impacted the guidance. I think by more than probably Aiera was expecting, but I think that what it did was it helped to show me that, even though it's not as conventional the way we might be looking at the stock, it's important to be able to bring it into the bigger picture as far as how we're trying to help clients and be able to give them a bit of a better assessment of what is likely to, what's the stock likely to look like over the next 3 months, not just over the next 2 years. And what I found is, as a fundamental analyst, is that increasingly, given how much data was being processed, right, and I think that how many clients even were taking advantage of that, it became increasingly hard for a fundamental analyst without those data sets, without those tools, to be able to provide a nearer term picture on the stock. And so, using these kind of, using a tool like Aiera, I think is really important for my process, and I think it's helpful to our clients too.
So speaking of your process, you've been an analyst for a long time. Has Aiera helped you uncover any of your own blind spots in terms of your work?
Yeah, I think the Facebook was an example of that, but I would also say I covered China internet in addition to U.S. internet, and Bryan had mentioned that part of the process is to language identify and then translate. And since Aiera is basically taking in thousands of sources through India and China, et cetera, it gives Aiera an ability to process information that would be very difficult for a US-based analyst who doesn't speak the language and who is trying to be effective on those names. And so that for me proved to be a blind spot. And I think when we look at something like the Trump trade wars, that I discounted the importance of those in terms of how the Chinese internet names would trade. And I think that there's an indirect effect, and there's a sentiment effect that kind of comes from a lot of that in the rhetoric and how folks will spend and the impact. So even though the names that I was following weren't necessarily directly affected by the trade, they were by the fact that the consumers of their platforms were affected. And so I think that's where Aiera had much better calls than I had at that time. And so sort of forces a reconciliation to say, are you looking for the things that really do matter to how these stocks are going to perform over the near to medium term?
So you gave us the example of Facebook, but I guess a question to both of you, have there been any other curveballs along the way or any other wrong calls that kind of caught you by surprise?
Wrong calls on my part or wrong calls on Aiera's part?
On Aiera's part.
I think, yeah, there's certainly there's certainly wrong calls. I think that any that come to mind from your standpoint.
I mean, none that were so egregious that it sticks out in my brain. Obviously, even at accuracy rates that we like to tout as impressive, it's still going to be wrong 20, 30, 35% of the time. So there's always incorrect calls. I'm struggling to think of any that were notable.
But I think that the challenge isn't so much in the call itself. I would say that it's in the explanation. Sometimes Aiera could even be right on the call, but when you read the explanation, you realize that the call took in a spurious signal, and that comes through in terms of the natural language processing and the fact that it's being written back to you. And so that's where I would generally view we're more critical of the call. As an analyst, we always make bad calls, I think that it's accepted to some extent. But you don't want to make bad calls that are not well explained. And similarly, you really don't even want to make good calls that are not well explained. So for us, the focus has always been more on the ability for Aiera to be a good stock picker, not the best stock picker, but be able to explain the calls in language and kind of in a way that, traditional fundamental analysts can relate to.
Bryan, a question for you. What parts of Aiera need improvement, and how do you see Aiera evolving?
I'd say user experience is a piece of it that we still want to consistently improve. One of the things humans do exceptionally well is really tightly organizing information in a way that an investor really wants to read it. So really nailing those thesis drivers that are most critical, rather than overwhelming with data or putting it all out there for people to consume. We are down that path. I mean, that's ultimately Aiera's mission, is to try to condense and summarize forecasts in a concise way. But I think that's an area that's going to always need ongoing improvement. And I think really tightening that is a key focus for us in the future, as well as just broad user experience in terms of the tooling and the access. We want to be able to fulfill the needs of the investor in any way that they need them, and as Ken always talks about, having access to Aiera's predictions when you're out on the road or when you're with clients or when you're with your managers, and having access to it through multi-channel and different ways to get that information is sort of a key that we have to keep expanding on in building the product.
And I think too, just the ability to annotate and indicate what signals are viewed as spurious, or even direct Aiera to focus on themes that an analyst or client thinks are important to that particular stock. Making that a bit more, effortless, I think, is an important part of what we're doing. We still want very much for the analysts' questions to be front and center, so their ability to interrogate Aiera through the dashboard and ask questions about the market and questions about the consumer, things that they feel matter to the stock. That's an important part of the development as well.
You started with an institutional buy-side service. How do you think machine learning can help with wealth management or with financial advisors?
Well, I think that it in some ways, the ability to offer Aiera within that area, I would say, is in some ways probably closer to being ready than not. The decision to focus more on institutional investors early on, though, reflects where our client base has been and is, and I think where most of our best relationships are. And I think that it also stresses Aiera a bit more around the types of data sets that can be overlaid and the learnings that will come from that, as well as provides a heavier level of annotation into Aiera and insight that I think can benefit all users of the platform. So it really had to do more with the feedback loop and more from an R&D focus in the beginning and trying to find kind of the best product market fit. But I would say that, the ability to offer Aiera and its research product and its written signals, et cetera, as a base level for wealth managers, I think it's there today.
So I guess final question, if I'm an equity research analyst, should I be worried? Now, I guess I'll ask you, Ken, have you succeeded in creating your own autonomous replacement, or is Aiera really just an enhancement rather than a replacement?
Definitely enhancement. And I think that there's things that I can teach Aiera, and there's things that Aiera can teach me. And I think it's important for equity research analysts to start getting comfortable with that idea that they're going to be working alongside of machines or working alongside folks like Bryan in the coming years. And I think that, but as I look at the industry, and you ask the question, should equity research analysts be scared? I don't think so. I think that there's very much going to be need for smart people and people who understand companies, who understand consumers, markets, and that's there's to some extent a blind spot in that area for AI. But where a lot of the market, I think, is wrong is they talk about it in terms of either or, man versus machine. And it really has to be a combination of the two to get a better result. And I think ultimately for fundamental managers to stay a part of the process. As we look out over the next 10 years, or maybe less, maybe the next several years, I think for folks who are looking at building their career in this industry, I think it'd be very important for them to focus on this question on how can they leverage what they do in a way that ultimately gives them control over a lot of this computing and data resources that are now available, as opposed to competing against it. And so that's something that's important for us to have. We have a lot of conversations with clients about that. And I would say that for folks who are on the more traditional platforms, one of the things that I've learned is that given how Aiera collects information and ultimately processes information through neural classifiers and regressors and explains itself through probabilistic explanations, etc. It's not as conducive to platforms where there exists a level of conflict in terms of how fees get collected. So, cash equities, investment banking, those tend to be things where, there's required disclosure around ownership and activities within the firm. And everything that gets kind of tied to inputs into advice needs to be clearly spelled out. And what's problematic about neural nets generally is that they are very difficult to interrogate. So what Bryan has been able to do is get closer to that ability, but it's something that will take some time. And I think that a model like ours, providing research like ours, is more suited than some of the traditional models that might seek to do so.
And sort of as a technical expansion to some degree too, even beyond just Aiera's focus, but broadly from an industry point of view, I'm a big believer that AI is much more likely to be a human augmenting technology over the next few years than a replacement technology. There's obviously exceptions. Some tasks and processes are highly suited for automation. But in general, humans are, as Ken alluded to, just better at creative processing and dynamic thinking and working in sparse data environments and leaping to assumptions and then testing them than the machinery is. And obviously, tech's always improving. Maybe we'll be developing neural nets that are more creative and better in sparse environments in the future. But for the foreseeable future, that's where the sweet spot lies for efficiency improvements and performance improvements, is just making humans work faster, smarter, better.
Well, it's been very interesting learning about Aiera. Thank you both for joining us for this episode of Take 15. And thank you also to our listeners. If you'd like to subscribe, you can now find us at iHeartRadio, in addition to iTunes and the CFA Institute member app. Thank you for listening.
Copyright 2019, all rights reserved. This program is designed to give accurate and authoritative information in regards to the subject matter covered. It is distributed with the understanding that CFA Institute is not engaged in rendering legal, accounting, tax, investment, or other expert advice. If legal advice or other expert assistance is required, the services of a competent professional should be sought.